You know what? We've passed my arbitrary number of what I think is legitimate to wait for. So welcome again, everyone, to this Placer AI webinar, our Q1 retail recap analysis and expectations. We're already in April, which seems crazy to me, but that is where we're at. I am thrilled today to be joined by two amazing guests. Sucharita Kodali, Vice President and Principal Analyst at Forrester Research. Sucharita, thank you so much for being here.
Yeah,
and
thanks for having me.
Of course, and Elizabeth LaFontaine, Chief Retail Analyst at Ensemble IQ. Elizabeth, thanks for joining.
Of course, happy to be here.
I'm very excited. So super brief intro we'll do like we do as always, if anyone is new, to understand what is the data that's going to be sitting in the backdrop while we have this conversation. And then we're going to look at a Q1 analysis, and as always, we'll kind of prognosticate and look ahead a little bit. We have time at the end set aside for Q&A, but even better, we'll take your questions as we have the conversation. So at any point throughout the conversation, you have a question, please utilize the Q&A button situated at either the top or bottom of your screen, depending on how you have Zoom configured, and we will try to get to as many of those questions as possible. Intro to Placer. Placer is a location data company. What does that mean? People vote with their feet. We show you how they vote across the United States every single day to retail locations. We do that by observing a panel over 30 million devices. Very critically, this is all de-identified aggregate data. We then analyze that data with machine learning and AI algorithms and present it in a wealth of different reports within our platform on everything from the customer journey, cross-visitation, visit counts, true trade areas, and a whole lot more. Time to get into it. Sucharita, I will start with you. When you look at retail in Q1, how did the performance align with your expectations?
Yeah, I mean, the truth is that there are just so many things that are happening in the world which seem to almost be at odds with some of the expectations around retail. So of course you have inflation as an issue, you have employment or unemployment rates, kind of just lingering over every business. Unemployment rates in the United States still continue to be relatively low. Around the world, the labor market is still generally fairly tight. But at the same time, you hear a lot of griping about the price of goods. You hear the constant, this constant expression of like a recession is coming. And it's like, I would have thought we would already have admitted that we're in a recession, but yet, all of these mixed signals suggest that it's not actually, maybe it's not officially a recession. So in the light of all of that, it is in general strange that we have not seen the absolute drop off in retail spend that you would think there would be, because overall, when you look at census numbers, and I know you have traffic numbers, Ethan, but when you look at like the spend levels, they're higher, and they're keeping pace with inflation. And you got to remember 2022 was a really strong year. So to have it comp like the highest year ever in retail and to pay for all of the inflationary effects is pretty remarkable for the consumer. Now, I think that there are a lot of questions underlying all of that. So you'll have, is the spend equally distributed? And, kind of, isn't this just really the bifurcation of, kind of people either buying really cheap stuff or luxury goods, and the middle keeps getting squeezed. But I don't know that that's a different story than the story we've been telling in retail for the last decade. So I think that, in short, if I were to summarize it, what we're actually seeing seems to defy expectations. And I'm just sort of waiting for the shoe to drop at which point will spend actually become aligned with the negative consumer sentiment that's out there.
I mean, really important analysis. Elizabeth, same question to you. How did retail performance align with your expectations in Q1?
So I would say in general, kind of what Sucharita was saying, it's surprising that we haven't seen the insane drop off. But what I like to say instead is that we're seeing kind of like a general slow decline. It's sort of like this recalibration of retail overall that we're seeing over the past few months. But January in particular really exceeded everybody's expectations. And I think that we saw a consumer coming out of a slightly tepid holiday season actually continue to spend. And February and March have started to normalize that a little bit more. But what I see happening across the board is that it's not a one-size-fits-all approach with how each industry within retail is performing. We know that general merchandise demand in terms of unit is definitely down to where it was at the height of the pandemic. We see that essential retail has been a little bit more bolstered by what's kind of going on. And they still have a lot of room to grow in terms of their e-commerce penetration and continuing to innovate a little bit more with consumers. I think the one thing that I'm seeing with consumers is that right now they're starting to kind of understand what's going on, and they're feeling a little bit of trepidation in terms of how they're spending. And they're really looking for that reason to buy from retail. It's no longer just, I have disposable income and I'm bored and I need something to spend it on. It's that they really need retailers to incentivize them to come into the store or go online and make a purchase. It's no longer just about like, I need it or I see it, I want it. There really has to be a need behind that purchase. And I think the other thing that we're seeing is that for a long time, retailers have been very focused on the ideas of providing convenience and providing experience for consumers. But I think that value is coming back into that conversation a little bit more. That is one of the major pillars that consumers are relying on right now, is they're seeing value as a reason for them to go into a retail experience or go on a shopping journey right now. And retailers are kind of recognizing that they once again need to lean into value as a reason to buy for consumers.
Yeah, I mean, it's interesting, and it's like a really lovely segue to the next kind of where we kind of dive in. I mean, both of you mentioned inflation, and obviously it's a really significant part of what we saw in Q1. But Elizabeth, to continue to start with you here, and Sergey, I'm going to come to you with the same question. When you think about the effect of inflation on, I mean, that might be a good way of looking at it, right, as an infection, but the effect of inflation on retail performance, and what you were saying, you kind of looked at it as the regrowing importance of value. Do you see that as the kind of the primary consequence of inflation within the retail environment?
I think inflation is certainly just one piece of the puzzle. And I think that if we think about the consumer's personal financial situation right now, there's so many factors that are impacting, and inflation is one of them. But if we think about rising credit card debt and student loan repayments coming due and housing prices and interest rates and all that, it all kind of becomes this perfect storm for consumers. But I think one of the interesting things about inflation is we've seen it obviously level off over the past few months, but it's the perception of inflation. And as Sucharita mentioned in the first kind of slide that we were talking about, it's the fact that consumers are placing value on some of these things, that even if the prices aren't necessarily as high, it's all of the noise going on around the consumer and how they are reacting to that noise. And I think that honestly has changed the way that they're looking at value. And I think as we also think about the bifurcation of different demographics, it obviously hasn't impacted high income consumers as much, but thinking about inflation, it's really the perception of inflation that has changed the retail industry overall. And as we think about when that impact is going to stop going forward, I think that we're not going to see drastic changes in that until interest rates start coming down, because people also know that it's really expensive to borrow money right now. And I think until we see that start to come down a little bit and they feel like they're getting a little bit more for their money, they're able to borrow money more easily, that's when we'll see the consumer feel a little bit better about things in totality.
That's so interesting. And one of the things we look at very often is how visits align with transactions, right? So our focus is on visits, which is a separate metric than transactions. But one of the things that we have seen is this really interesting ongoing correlation between visit duration and visits. And we're in these periods where the economic situation is a little bit tighter, or there's a reason, we do see that balance shift more in the favor of visit duration. And that's what we're seeing in the last month or two, where even though we're seeing visits declining, people are spending more times very often at these locations. And I think it's a really interesting show of like what you were saying, like there is a consumers feel whether it doesn't, obviously inflation is real, but it doesn't even matter if it is, it's the perception of inflation that I think almost matters more for most consumers. Sucharita, for you, when you think about the significance of inflation's role on consumer behavior in Q1, how significant do you think it was? And do you expect that impact to last in the coming months?
So there are a couple of things that want to call out. So this data, all of your data, Ethan, I think it makes a lot of sense because it's year over year data, and it's almost like kind of kind of like the beginning of like a U curve. So the reason for that, we'll all remember, we were just talking about this, is that the beginning of 2022 was the Omicron variant in the United States. So, the store visits were pretty terrible in January 2022. So the lift in 2023 should be what we're seeing. And I think you're nodding.
Yeah.
So I think that you're in agreement. And by, kind of then we had like, I think the booster shots that people were taking, and, kind of just this, kind of just almost a sense of, kind of it's probably like the flu at that point. So there was more of going back to the stores by February and March, and that's why you see the flattening to, in some cases, days of decline or weeks of decline from a year over year standpoint. So there's that dynamic. However, when you look at POS data, when you're looking at overall sales data, people are spending on average, kind of everything that they were spending last year plus covering inflation. So, the inflation effect is that, it makes you complain, but it hasn't really caused tremendous decline in demand. Now, that is an overarching statement that is about all of the retail industry. When you go into the subsectors of retail, it's very different, right? So, restaurants are doing very well right now, but it's not all restaurants. It's like, QSRs or, fast casual. You have, kind of certain sectors like e-commerce is doing okay, but you have, grocers are of course doing okay, but you don't have, the mall merchants continue to suffer. Apparel's not been keeping pace with inflation, so there are pockets of challenges. But even within apparel, you'll see like Lululemon blowing its numbers out of the water. So, kind of there's the overarching story, and then there's all the little trees within the forest that have their own tails.
Oh, I think it's so important. I actually a question came in that I think it's super important and I struggle with. And basically it says the perception of inflation is secondary to the actual effect on the mass group of consumers who are feeling the actual reduction of their monthly disposable income due to inflation. To whitewash or dismiss inflation effects on household disposable income is at best misguided. I have to be honest. First of all, let's be clear. Inflation has a really significant impact on certain parts of kind of the population spectrum, and that should not be belittled in any way, shape, or form. I am struggling to find the place where it is, I in some cases, and again, I accept the fact that maybe this is misguided, I do think the specter of inflation and the specter of the economic headwinds is more significant in some cases than inflation. And I think, I wonder if Sukrita, started with you, do you have an opinion on this matter? Because I think it's a really important point, and it's worthy of addressing.
Yeah, I mean, I think that there are a lot of, economic analyses of this. Justin Wolfers is an economist at the University of Michigan who, kind of, he's like, there's a difference between core inflation and, kind of like these inflation numbers. And, kind of so long as like, some of those core numbers are flattening or going down, like that's the most important thing. And there are a lot, yeah, absolutely. I mean, a lot of concerns around, will this lead to hyperinflation and, kind of what happens over time. But I agree with you. I mean, there's so much to talk about on this, and I could go on for hours. But the truth is that the consumer on average has not, you're absolutely right, they haven't really cut back on their demand, and kind of it is puzzling. One part of inflation that I even question in some of the numbers, because when you dig in, it doesn't, there's an inflation number, there's also something called a chained inflation number, and kind of inflation as calculated by our governments is often just the basket of goods and how that price changes. But what it doesn't always account for is, okay, so gas is X% higher, but are you driving less, or are you using, kind of a bike, or are you walking more, or, kind of, are you, do you have a hybrid now? So that's changing, kind of how much you're actually paying. So that's why I look at actual sales data and the retail numbers, because that will account for any substitutions. And that's true in, in grocery and anything. Yes, like, milk may be higher, but then maybe you're not drinking as much milk. And that's harder to find in the data. But that's how, I make sense of how is it that people who are struggling, how are they actually coping, in the midst of these price changes? There's plenty of choice in the, especially in the United States. No shortage of retail, no shortage of retail opportunities. You can usually find, kind of almost anything you're looking for at a price point that, kind of is acceptable to you.
I mean, yeah, a really interesting point. I do think the subtlety here matters a ton, and we're seeing like a lot of comments come in. Different segments are obviously impacted differently, but I do think that wherever you sit on the spectrum of this issue, it is important to recognize that the perception of an issue like this is an animal in and of itself. And I think one of the things is, even as we see hopefully the impacts of inflation start to dissipate, the psychological impact on behaviors could last even longer. And I do think it's an important element to call out. I want to kind of go on, because this is obviously something we could discuss just for the rest of the time. But Elizabeth, I'll start with you here. When you look back at Q1 and you think about overachievers, brands that you think kind of really performed well, is there a retailer or retail segment that impressed you in Q1? And what can the wider retail landscape learn from that performance?
So I feel like I'm cheating because I know we're going to talk about this a little bit later on too, but I would be remiss not to talk about the convenience channel, because I think that even just regardless of performance, I think a lot of the innovation and interesting things coming out of that channel has really kept pace with what is going on with the consumer. I think a lot of retailers are feeling the pressure to stay relevant with consumers these days, and also keep up with the agility and the speed at which the consumer is changing. And convenience has done a really amazing job at testing formats really quickly and rolling out those changes. And if we think about embracing what is going on with the consumer and changes to consumer behavior, they have rolled out things like electric charging stations very quickly. They've tested autonomous delivery in local markets very quickly. They have really leaned into a lot of the larger grocery trends that we've seen, like prepared foods and third-party delivery. And the speed at which that channel that we think of as being kind of this very essential, everyday, high-touch category, they've done a really good job at staying up with the times, and even being, I think, one of the first in line in terms of innovation. They have welcomed that consumer, and they have higher visits than any other channel. And so them being able to innovate very quickly and keep up with that consumer is something that has been remarkable to me. And they've also become very beloved. If we think about the growth of TikTok, there are these brands like Buc-ee's and Wawa and Sheetz that have just dominated the social conversation too. And that has really kind of cemented them as a beloved brand with consumers outside of retail even.
All right, that's amazing. Sugrita, same question for you. Retailer or retail segment that impressed you in Q1, and what can the wider retail landscape learn from this?
I think that it's the dollar channel has been always an interesting one. The QSR channel, I think, is surprisingly interesting. I mean, you would think in, kind of if you were economically distressed, that you wouldn't be eating out, that, you would do everything you can to, kind of save, to, eat at home, et cetera. And, kind of yet the QSR sector, which absolutely has been passing, kind of cost expenses, labor expenses, ingredient expenses onto consumers. It's, kind of, it's more expensive than ever to eat out, yet that sector is doing really well. So I'm just torn by a lot of the cognitive dissonance, like people complaining and saying this is terrible, and it's all the politicians' fault. But at the same time, their behavior is not reflecting their angst. And I just kind of it's hard to take then complaints seriously when in kind of these sectors of highly discretionary retail, we're not yet seeing pain.
It's so interesting. I mean, I'm loving the questions and comments that are coming in are essentially like, we have one that's saying there's so much been a lot of refinancing of mortgages, and that could that be having an effect on consumers on spending and the savings. You're seeing that one comment came in of like, yes, but all these different products, there are different effects. And I think the answer is like all of the above. Yes, I think this is I think one of the challenges, I wonder your takes on this, is that it's not a simple issue. And I think pretending that this is, here's a negative thing and it is having a very singular effect, I think is wrong. Whereas it has very different effects in different segments, on different types of products within those segments, and in different types of people in different type of segments differently. Like, it's all of those things are true at once. And I think it makes it a very complicated topic that, at least many of the conversations I hear about it, it feels overly simplistic. It's like inflation is here, inflation is bad, the consumer is feeling pain. Whereas it's just not that, it's not that simple.
Right.
Yeah.
All right, let's go into another one that will obviously be equally fun and easy to handle. But the pull forward of demand, right? This is one that's been fascinating me for a while. Sucrit, I'll start with you here. When you think of kind of the pull forward in segments like consumer electronics or home improvement, how do you expect that impact to last? And how can retailers within these segments kind of cope in the short term? Because it's a significant challenge if you felt so much demand in such a short period, and now you're trying to, and there's usually these longer cycles, now you're trying to hope that comes back quickly.
Yeah, electronics is a funny one. There's there's the traffic numbers. And I know there was a question about traffic versus, well, traffic and visits are generally the same. Visits and sales are different though. So kind of in terms of electronics, I mean, there are all the, I think some of this could also be just the increase in e-commerce. Electronics has had a strange few years. Kind of you had hyper supply chain, you had terrible supply chain issues that created tremendous, kind of challenges with supply, but then you have a glut now, and you actually, it's one of the few categories of mobile phones that have actually experienced deflation, televisions, so major subcategories within consumer electronics that have, for better or for worse, are actually cheaper on average for you and me. So I think there are some weird things happening with electronics that we're still cycling through from sort of pandemic residual impacts. So that's one sector. For home improvement, I think that's largely tied to the housing market. There's some strange things happening with the housing market now too. On the one hand, you have high inflation, which means mortgages are more expensive if you take out a loan now, or if you had an adjustable rate mortgage, it's like a sudden, kind of increase in what you have to pay, which is also problematic. And you're probably not going to be like renovating your house or making extra, things. But, kind of there's also a segment of the population that if you got a mortgage back when interest rates were like near zero, you are essentially wealthier than you were, so kind of that segment of the consumer is also doing fine. And kind of you have these interacting effects. There's another really good graphic that I think came out of one of the real estate companies that basically showed in the United States, like there's a complete difference in the West Coast and the East Coast right now. So the West Coast is highly impacted by all the tech layoffs, and housing prices are going down in key markets like San Francisco and Los Angeles. You have almost every market on the East Coast still very tight, and prices are going up even in spite of inflation. So to your point, Ethan, I mean, there's just a lot that is just going in opposite directions. And I think that that's what is confusing to everybody.
I mean, this is, I mean, I want to get to a question that came in regarding a kind of home improvement. It says like 71% of, you know, he writes in quotes, children under 35 are living at home, a record percentage. I would think this has a significant impact on the above categories. I mean, I feel like totally, I mean, I feel like, again, here's one of these areas where like, it's interesting with home improvement because I do think there's a lot of short-term things that might be slowing this down, but the category overall, a lot of people did move during the pandemic. And it's, again, there was migrations in and out of cities in two different areas. But it feels like that still has a long tail of like, all right, maybe this is slower for the moment and you're seeing dips because you're comparing to a seasonal peak. But like, feels like a sector like that has tremendous bounce back potential, at least in my eyes. Maybe I'm being overly optimistic. I mean, Elizabeth, for you, when you think about these wider economic challenges and things like the pull forward of demand, how do you analyze a company like Home Depot or Lowe's or Best Buy? How do you give them kind of the proper context in terms, how do you provide that proper context when you're kind of trying to analyze performance?
It's a great question, and also I think an extremely challenging one, because I think when we analyze retail performance, we always want everything to be, we always want to really flatten the curves. We want to understand what is the long term and the long tail of all of these impacts. But as you just said, I think that the way that we have to look at the retail industry right now, where everything is so fragmented, is you have to really break things down in the short term and in the long term, because there are the short term impacts like seasonality, like all of the changes that we saw this winter. We had so much rain on the West Coast. We had really tepid temperatures on the East Coast. People might have been pulling up their demand of home improvement on the East Coast because they had a very unseasonably warm winter. They were able to start those projects a little bit earlier or carry them on a little bit longer than they normally would. So there, I think as we're thinking about pull forward demand, we could even look at general merchandise in general during the pandemic and say that that was pull forward demand, because it was people purchasing things that they didn't necessarily need because they had time available to them, or they needed something that would bring them comfort. And now we're seeing kind of the longer impact of the pull forward during the pandemic. So there's just so many short-term and long-term implications that it's really, I think, hard to generalize performance right now. And you really have to dig into those individual sectors, individual demographic groups to really kind of figure out the full story.
Yeah, I think you're right. I think the layers of complexity are important. I want to get to a few questions before we move on. So we had one question. It's basically, it's the general one, so this is easy. I mean, Elizabeth, let's start with you, and then Sukri to get your thoughts. Thoughts on the luxury retail sector?
It's a great question. I think that luxury has been, as we sort of have talked about, the matrixed world of retail performance these days. Luxury has been an outlier for many reasons, and I think that so far they've been able to keep up with a lot of their demand. I think part of that is obviously, as we talked about, households with higher disposable levels of income have not been as severely impacted by the perception of inflation, by a lot of the personal financial situations that people are finding themselves in. They still have very high home values. They might not be as saddled with student loan debt. They're not adding to their credit card balances, and they've been able to continue to purchase as if everything is normal. I also think that the luxury world has done a very good job of continuing to generate demand over time by newness, by product innovation, by brand innovation, by staying relevant with their consumers, by engaging with consumers through different things like short form video and social media, that they've done a really good job of maintaining a high brand presence during a challenging time.
Yeah, Sugrita, your thoughts on the luxury segment?
Yeah, everything that we have heard and seen is that luxury continues to be fairly resilient. You look at numbers from companies like Kering, you know, their numbers are stronger than ever. So there's definitely absolutely resilience amongst the consumers that are affluent, that you know continue to have savings. And luxury also is should be positively impacted in 2023 by Chinese consumers. You know, as that market opens up again, it's always been a huge part. Well, I shouldn't say always, but in the last decade or so, it's been a huge part of the luxury sector. So that should help. And as tourism in key markets like Vegas or Miami picks up again, I would expect that that should buoy the 2023 numbers and for those companies too.
Interesting. I mean, I want to get there was a question that came in. What's the difference between visits and traffic? They're the same. We're just looking at foot traffic. So like kind of like actual physical visits to stores. And then one more was actually about a similar question to this, but focused on the mall segment and specifically the relationship between visits and visit duration. And we're seeing that same thing, like visits, you'll see our mall index is coming out, I think, tomorrow. It is visits are down and they're down year over year, but visit duration is up. And we're seeing, especially for longer visits, it's pretty significantly up. And it gives us this indication that, again, there's this idea that I'm not going to go out, you know, Sukrita was mentioning this of like one approach to costs are higher for gas is make each visit count. Don't, you know, if I would normally go to the mall twice a month, I'll go once, but I'm going to go and I'm going to make that experience last a little bit longer, which I think is something we've seen, you know, whenever there's where there was high gas prices last year or even mission driven shopping during the pandemic. But now we can shift our gears and look a little bit ahead. And unsurprisingly, I said this to both Sukrita and Elizabeth. I was like, there's no chance we're getting through all the content today, and I think we are going to hold to that, which is amazing. I think one of the things that's really interesting is how much the consumer has changed in the last few years. And Sukrita, I'll start with you here. We've seen shifts in where they live, to when and where they work, and essentially just lots of people seeing fundamental changes in their day-to-day. How do you think this change impacts retail behavior, and what do retailers need to do to take advantage?
So there was a great study that came out from one of the banks that basically showed the shift in retail, especially daily, whether it was essential or just sort of daily purchases like coffee shops and kind of like a quick service restaurant. The shift to suburban, kind of venues versus urban city center, kind of office complex, kind of sales. So that's probably been one of the biggest questions is, this hybrid, whether it's hybrid work or, you're only coming back like 4 days a week or 3 days a week. That's, 20 to 40% of the visits to those local establishments that were once in these dense urban areas now gone, right? Or it's, they've declined substantially. So, but many of those visits haven't gone away entirely. They've just shifted from urban to suburban venues. So that's one of the things that we have seen. So it'll be interesting to see, like particularly for companies like Sephora and Macy's that have started to open stores in strip malls, in these neighborhood centers versus like your traditional malls. Kind of that seemingly should be a strategy that should work. What you're showing here, Ethan, I think are kind of some of the longstanding trends, which are that grocers and club stores are of course doing quite well, and a lot of their old patterns have resumed as people are going back to stores and certainly spending in those categories.
Yeah, I mean, absolutely. I do think there is that. I do think that you do see these small but significant changes. I think even, the 20 to 40% part is important, because if 40% of your time is now being spent at home, the example we always give is, if you were commuting, leaving the house at 8 to try and get to the office by 9, and now you're working at home, you go to the grocery store at 8:15 and maybe get that out of the way when it's a little bit calmer on a Tuesday morning, as opposed to kind of, I think there's a really interesting change here. I mean, Elizabeth, for you, how different is the consumer today compared to pre-pandemic? And again, same perspective, like how do retailers adapt?
I think it's fascinating because in so many ways, the consumer there's been lasting impacts on the consumer, things that have been really inelastic for them. And then there were other behaviors that started before the pandemic that have really rebounded and returned to how they were before. For example, one that's rebounded was a return to experiential spend. That was a $475 billion business before the pandemic that basically went to zero in 2020 and 2021 and has returned in droves with things like revenge travel. Certainly 2023, things have been a little bit more challenged, but we know that the consumer wants to leave their house. They want to go to sporting events. They want to travel. They want to go to Taylor Swift's arena tour. They want to do all these things. And that has really, I think, been one of the lasting impacts on the retail industry holistically. But then we've also had some other behaviors that I think have changed for good in the long term. If we think about the penetration of e-commerce sales during the pandemic, we went from about 11% in totality to jumped up to 17% very quickly. And we've settled out at around 14% of sales done online across the retail industry. But we've seen that a lot of consumers who never previously wanted to shop online or didn't know how, or they just weren't interested, a lot of those behaviors for consumers have stuck. So as we think about retailers, I certainly think that the balance, we're kind of finding that medium balance for e-commerce in terms of where consumers lie between physical and digital retail sales. But I think retailers have kind of had to understand that a lot of these things have accelerated very quickly, and we're now kind of finding that middle ground for consumers, and they need to be able to keep up with that consumer and figure out where they want to shop. And it's no longer just about channel strategies. It's really about unified retail so that they can reach their consumer wherever they are in this new world that we live in.
It's a great point. I agree with you completely. Skipping a little bit, I want to talk a little bit about C-stores because I found them fascinating. But before we get to that, a question came in that I think is a really interesting one. Second great question from the same individual. So bravo. The trend to urban suburban, is it purely a transfer of business from urban sales, or is it a new opportunity? I'll kick off, and I'd love to hear your thoughts on this. I think it's both. I think this idea of certain people going to the suburbs, it's not like, oh, that's it, there's now no people in cities. I think there's a transfer of obviously there's specifics here, but in general, there is a transfer. I do think cities are getting a little younger. I do think as a result of kind of those spaces opening up, and I think there's these amazing retail opportunities in urban environments as a result, especially for like a really important and hard to target Gen Z audience that I think is taking up these retail spaces. How do you, and Sukarita, let's start with you here. How do you see that suburban urban transfer?
It remains to be seen. I think that we spent a lot of time in the last couple of decades talking about mega cities and megalopolises. Kind of that was sort of one of the big themes, is that we were going to have the ultra huge 100 million people cities in the future, because that's where all the companies were and the jobs and the IP and et cetera. So and then you also started to see this move toward like the 15-minute city, kind of in some experiments to, kind of create the perfect walkable city for everybody. And then the pandemic sort of upended all of that. And I'm not, kind of in hybrid work kind of finally, I mean, I've been a home worker for like 2 decades now. So I've been a huge fan of it for a long time, but until the pandemic, I was fighting an uphill battle by saying how great it was. Like people would be like, no, you got to be in the office. That's where communication happens. And that's how, you get anything done. You can't get things done at home. Kind of, you basically had this, kind of a questioning of fundamental premises that I think happened in the last few years. So I think it really, I think the jury's still out on what happens to cities. It's going to take a long time for cities to fully recover. Like, kind of if you lose 20 to 40% of your foot traffic overnight and it doesn't come back, at least to those places. So what happens is that gradually you're going to have companies moving into smaller spaces, kind of all of these landlords have to find new tenants. They will eventually, they'll redevelop or they'll do something. But it's, kind of this I think that the narrative, or I think the thesis that we would have like the 100 million person city over and over and over again everywhere in the world, maybe that's not going to happen.
Wow, interesting. Elizabeth, your take on this?
That's a great point. And I think that as we think about retail and kind of the shift of urban to suburban retail environments, I think that to begin with, it was probably just a shift because as people are migrating out, they're also migrating their purchases out. But I think it still kind of remains to be seen what suburban environments can do for the retail industry. But I do think that there is a way to drive incremental demand there, because I think that you're dealing with people who now have more space. They're in a car potentially more than they ever were before. For example, I moved to Los Angeles during the pandemic and had never used a car before I was living in New York City. So you have people that now have more access, they have more space, and they have the ability to do more things outside of a city center. So, and they're driving to these places. So I think from a retail perspective, a lot of those people might not have used options like BOPUS or curbside pickup before. So figuring out ways to drive incremental demand when the consumer is making a suburban shopping trip is going to be key for the industry going forward.
I mean, excellent points, both of them. Let's go into C-stores and see what else we have time with. I mean, and Elizabeth, or Sukarit, actually, let's start with you here. I think C-stores have been incredibly impressive, not just because of performance, but also like the innovation, this idea of kind of this QSRing process, leaning into kind of the, hey, there's grocery and you can come get stuff in and out really quickly. Isn't that great? I mean, what do you think is the underlying drivers of their success?
Yeah, I mean, that's been exactly it. I mean, you look at like Sheetz or Cumberland Farms, Casey's in the Midwest, like a lot of it has been food. A lot of them have invested in digital, so you can do your order ahead of your food. And the food's actually pretty high quality. You have a lot of people, kind of going there for the food. So I think that's been something in their favor. The C-store sector, I think, it will be facing an existential crisis, though, over the next few decades, largely due to electric cars and hybrids. And if you need less gas, the question becomes, well, what then becomes your reason for being, and what else can you do, to adjust for that? But that's a very long-term issue. It's sort of like AI and like the long-term versus short-termism debate that's going on now. I think that C-stores you're absolutely right, especially as people are, driving more, they're paying, a pretty penny for their gas. They're doing okay, and then the experience in the C-store, that old notion of the C-store where it's like this dirty, gross place and like the bathrooms are nasty, they've done a great job changing. A lot of these big players have done a great job changing it.
That was like the tagline of one of the big brands: "Come in, we're gross, and our bathrooms are nasty." But like, I mean, I think your point's really, really interesting, especially on like the driving side. I think one of I didn't even really start looking at it until we had this, like they must be getting hit really hard because commutes are dropping. And then we were like, wait, they're not. What are they doing that's so effective? Elizabeth, from your perspective, what can the wider retail landscape learn from this strength? Is this like a unique case, or are there elements here that can apply elsewhere?
So I definitely think that there are elements that can apply elsewhere. And I think part of that is the C-store channel is very agile. They are doing a really good job at throwing an idea on the wall and actually executing it and testing it and rolling it out really quickly. And that is something that I don't think many other sectors in the retail industry have the infrastructure in place to be able to do. In my neighborhood in Los Angeles, 7-Eleven has been testing the autonomous delivery vehicles, and that's been a test that's been rolled out relatively quickly. Same thing with the electric charging stations. And I also think that C-stores, as you guys were just talking about, have done a really good job at building a brand that is relevant to consumers. And even in urban environments where consumers have been leaving and 20 to 40% of they're losing that foot traffic, C-stores have done a really good job at still cementing their place in those areas. But if we look at, you have the example of Buc-ee's on the screen, I think that in terms of brand building and staying relevant to the consumer, I had never even heard of Buc-ee's before I joined TikTok. And the amount of love and relevance that these brands have been able to cultivate with consumers through social media and creating experiences that rival some of the biggest experiential retailers that we see across America. They're an experience that the consumer wants, they crave, they understand it, they welcome it. And that, I think, is another area that the entire retail industry can learn something from, that experiential doesn't have to be grand. It just has to be new and exciting for the consumer.
Fine, I'll join TikTok. Sucharita, Elizabeth, thank you both so much for joining us. We have run up against it. This was a really, really interesting and enlightening conversation. A lot of really kind of interesting opinions that I hadn't kind of expected to hear, which is always makes it that much more enjoyable. Everyone, thank you so much for joining us today. It's appreciated as always. Please, we'll be doing our next one in about 2 weeks with Simeon Siegel. Again, looking at retail, but a little bit more on the apparel space. So please join us for that. And again, have a wonderful day. Sucharita, Elizabeth, thank you both so much for joining. Everyone have a wonderful day.